welcome back to MMG. Let's do some TA and figure out if the markets are going to correct. What's going to happen with gold and silver? First of all, not financial advice. Consult your licensed financial advisor before doing anything. I am not a licensed financial advisor. Stocks, extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. And I could be completely wrong. This is more of an educational channel on how to trade and listening to me rant and give you guys my opinions, which may be right or wrong. All right, here's the COT, gold futures, open interest chart. I'm going to talk about open interest because there's a record amount of shorts, and I'm going to have to talk about that. Can't ignore that. But first of all, let's talk about is the market going to correct or not? So I was making a video and then it crashed like 30 minutes into it, so I'm just gonna have to do it again. Hopefully this time nothing will happen. I can get this video out Sunday afternoon here. VIX volatility index, it's still pretty low. It's near the bottom. Of course it could stay low as long as the market keeps slowly rising, right? But you need to point out the fact as a contrarian, it's near the bottoms. And I think it's overdue for a nice spike, meaning the market's going to correct. That's when the volatility picks up, right? Gold's doing great. We all know that. All right, so the dollar, it's at 96.89. So it had a little bit of a bounce in the past 2 weeks, but that's as a safe haven trade for short term. I still expect the 200-week MA to be retested around the 95 handle, somewhere around there. Maybe a little bit above it, 95.3 or 2 or something, in the coming weeks. And, you know, Powell, Trump, they've all have been screaming they want a weaker dollar. It's too strong, apparently. They want more inflation. They're going to get it probably. So I still expect a retest of that at least. I mean, zooming out, it relatively, the DXY, which is a dollar-weighted index against other fiat currencies, the dollar's still strong. It's still pretty much king as of right now. But a little bit of a weakness in it isn't going to hurt the U.S. Might help with trade, I guess. But that's also what they want, and they're probably going to get it in the next coming few weeks and months. What's really interesting here is the 10-year yield versus gold here. As you can see, there's a huge correlation here. Gold rises as the 10-year yield drops, right? Not always. Sometimes it doesn't, as you can see right here in the shaded area. But you know what? It's been pretty spot on as of late. As you can see right here, yield started dropping right here since September of 2018 all the way down to August of 2019. What did gold do? The orange line is gold, and this is a weekly chart of both. Gold just kept rallying higher and higher. And right now the 10-year yield is it's dropping, which I expected, right? That's what these arrows have been here for like a month or something that I've put in. Now let's add another thing here, which is the S&P 500. The S&P 500 has been rallying with yields dropping as well. The yields drop, the S&P 500 rallies as well. That's because interest rates are low, so you get more cheap money going into the markets because of people borrowing. All right, so with corporate buybacks, CLOs, right? All right, so the S&P, I expect a correction or pullback, and that's why I made my all-time high call, right? Which is still not wrong, and I will be a legend if the market's correct next week and we never make an all-time high ever again. All right, so the S&P, if it could pull back or correct in the next few weeks or months, I expect the yields to drop because the Fed's going to lower interest rates at the FOMCs, right? And they're going to try to cap interest rates lower. That is all positive for metals. One, it's a safe haven, right? So if markets drop, people buy metals because of a safe haven for a recession. And the other reason is yields dropping is also very bullish because of this correlation for metals, right? All right, just want to point that out. Let's take a look at the S&P. Is this thing going to correct or what? Here's a daily chart. You know, we're not at all-time highs anymore. It has fallen in the past 2 days. That's because of the escalation in the sandbox, which can escalate at any given moment, right? Something could pop off. Hopefully it doesn't. I don't like, you know, war. I'll make a separate video on that, what I really think about all that. It's just I can't put it on this platform, so look out for that this week. And I'll tell you guys where you could go to find it. But, yeah, I mean, S&P, again, it's above the channel. And the heat map's telling me that, you know, it's very overextended. All the oscillators down here. Your MACD, MACD is crossing to the downside finally on the daily here. RSI momentum oscillator has peaked out and it's heading back down now. It needs to reset, and that's all bearish. Now let's take a look at the weekly. We had a 9 sell 2 weeks ago. We're on a new week now. Market's just open, or will open very soon. And then I still expect a correction. I mean, my heat map is telling me it's due for a correction. That's the TDI heat map. And momentum oscillator, RSI, MACD, they're all overextended. I mean, it's still overdue. And TA wise, it's overdue, guys. I mean, even if this surpassed the 9 count sell, there's a perfect 13 sell as well. Right now we're at a 10-11, so maybe 2 more weeks of just sideways or slightly up. But honestly, I think this next week we're gonna get a correction. Let's take a look at a monthly. It's on a 5 count, but I don't like looking at the monthly. It doesn't really work out. Look at the 31 day. All right, so the monthly is on a 9 sell count with the TDI, right? So this month, we should get a 1 to 4 or 9 candle pullback correction. We'll see how deep the correction will be. At least I'm expecting to revisit the bottom of this channel, at least, which would take us around 3,000 to like 28 on the S&P 500, which would be a huge correction. People will start panic. Fed will panic. All right, all bullish for metals. The only bullish index I see is the Fang Index. It has a 1, 2, 3 count to the upside, but I talked about that in my last video, that all the money likes to flood and flow into the major growth tech stocks, because that's what's been happening for the past 10 years. So for some reason, people feel comfortable in there. They feel comfortable owning Microsoft, Apple, and all that, right? Netflix and Amazon, whatever. So the Fang Index is just rocketing higher here. It's hitting all-time highs. But, you know, the markets aren't... And this is why the markets keep going higher, because the Fangs are pulling up everything. But the market isn't made up of 5 big stocks, all right, guys? Let's take a look at the Russell, the 2000s mid-size companies, domestic in the U.S., right? This is the Russell. This is a weekly. It's much weaker than the Fangs, NASDAQ, S&P, the Dow. And this is sort of a leading indicator for me, all right? And it's already pulling back from a 9 sell, and it's on a 2 candle pullback, and this is a weekly chart. For 2 weeks now, the Russell's been pulling back while everything else has been going a little bit higher. A little bit, not by much. So, more signs of weakness. It's also still overextended, the Russell. So, I think there's going to be a deeper correction than just a 4-week correction here. So I think there'll be a 9-week correction, meaning there's like maybe 7 more weeks of downside on the Russell, which would eventually take the rest of the market with it, because people watch that as well, other people as well. Here's the NASDAQ weekly chart. Look how red the heat map is. It's either going to start next week or the week after. Look at the RSI. extremely overextended. Momentum oscillator, extremely overextended. MACD, extremely overextended. All right. What's this? Here's crude. People are like, it's going to go to 150 if, you know, the sandbox blows up. Yeah, easily it can. Like I said, I'm going to make a separate video. I've talked about it in the chat groups, but I'm not going to talk about it on the video, right? So if you want to know my thoughts, just go in there and you can see it. But it all depends on what happens in the sandbox. Either way, crude was going to go higher, and it's been steadily climbing higher, and this is a bottoming formation. So in the next like 5-10 years, I do expect higher crude prices, but I also expect a weaker dollar. And this chart is based on dollars versus oil, right? Crude. So yeah, I mean, crude for a long-term trade or investment, you might want to look into it. Not financial advice. All right, natural gas, just that market is that bubble has popped. It's just, look at this. It's destroyed. It can't even get a dead cat bounce. Here's Dow Transports. It looks like it's ready to revisit the bottom of this channel, which would also be negative for the markets, and it'll pull down the rest of the markets because it's an indicator for professional traders. Here's the financials. They look very top heavy and look ready, right? Look at this. This is a daily chart. So next week, if the financials start selling off, that should signal to the markets as well. All right, here I made some fun charts for you guys. We were theorizing. This is a theoretical chart. This is theory. This is not. This doesn't mean this is going to happen. This is my theory. If we get the big final correction in 2020, this is the S&P 500. This is a monthly chart of the S&P 500. Every candlestick represents a month. If we get the big crash, this is what it's going to look like, right? And this is like what? A 50% correction. Just like 2008. Right? A 50% correction. If we get a 50% correction, what's going to happen? I'm theorizing what will happen is PPT, Plunge Protection Team, will get rate cuts to 0 by the Fed. Trump will probably still win because, let's just say the powers to be, you know, they only Trump could save it, you know, could save the economy. And I think everyone would vote with their pocketbooks, meaning, you know, it might have crashed under him, but at the same time, he's probably the only one who could pull us out or at least have a chance. You know, people don't think about that. And then, of course, repo will extend into QE. And that'll probably put in a bottom, right? To, let's say, theoretically, a 50% drop down to like, you know, 1,600 S&P 500. Because that's pretty much what it did back in 2008 and then the NASDAQ bubble, right? It'll look like this. Except I think this time it would be much quicker, much more, it would happen quickly. I think it would happen much quicker than it did in the past because the bubbles are that much greater. We've got corporate buybacks and all kinds of crazy derivatives and stuff going on. You know, that's been accumulating since this longest bull market in history in the past 11 years. Then we'll get a huge rebound, right? But it'll be a giant bull trap. And then, you know, you could take that off of the Wall Street cheat sheet. And then we'll get, you know, another pullback correction because the economy will be in worse shape than it is now. And then I'm speculating that maybe we'll get more QEs, right? 4, 5, 6 announced. That'll keep the market up for a little bit longer. Then a new president comes in. And by that time, I expect, believe it or not, someone worse, right? Like a full-blown lefty, like hardcore lefty, right? And then that will and then they will, of course, do helicopter MMT, bail out everyone, like mass welfare. And then maybe another bounce, keep everything sort of running on endless money printing and credit and cheap money. And then eventually we will get the hyperinflation, helicopter money, and full-blown lefty country, I guess. And then either the market will just fall to, who knows, zero, or we'll get hyperinflation and then the market just goes higher like Venezuela. Now, here's the thing though. This is the worst case scenario, I believe. Of course, the worst case is just go straight down to zero or whatever, but I don't think it'll happen that way because they just won't let it. They're prepared. All right, guys. So this is my theory of how things are going to play out in the next, until like 2030. And this is complete theory. I could be completely wrong, right? I'm not even saying I'm right on this. This is kind of how I think things might play out. Now, of course, if the sandbox blows up and we get WW, 3, then I don't know. I have no idea what will happen. Of course, guys, I'm not a prophet. I'm just drawing some stuff here, kind of game theorizing how the U.S. might play out and the markets might play out in the next decade. Now, keep this, memorized, right? You see this? Now let's adjust it for inflation, because S&P's not adjusted for inflation in that last chart. This is kind of what that would look like adjusted for inflation. So if you were to go sell your stocks, right, they would be worth much less because the fiat currency itself is worth much less, right? So inflation adjusted, it would kind of look like this, which would still look like that Wall Street cheat sheet chart, right? All right, so let's take a look at open interest. This is unbelievable, guys. Come on. Load. I have so many windows open, it just keeps crashing. That's why I ordered a new laptop. All right. Here's gold futures. Check this out. 799,000 contracts. How much is one contract? One contract is 100 ounces of gold. 100 ounces. Each ounce is worth like what? $15.50 right now. So I did quick math. That is, so if you round it up, 800,000 contracts is 124 billion with a B in open interest. And most of it's shorting gold. All right. So that is scary. So are the commercials, the banks, going to smash gold? Let's take a look at a chart. Here's a chart. If it would load. All right. Here's 2020 February. Well, here's a good chart. This is a 5-year chart, and this is the price of gold, right? Below it is large speculators, which is the blue line. It's pretty much neutral. It's always around zero. Small speculators, which is the green. Or no, the large should be the green. Well, commercials are red. There's no key. All right, anyways, the commercials are red. That's really all that we're looking at. And we're looking at large and small speculators. It's really, I would have to say large is the green. So whenever you see a huge spread like this, we get a huge correction. Here's another correction. There's a decent spread here, right? And right now, look at this spread. And look at the price currently, right? $15.50. Look at this huge spread. So what I'm worried about is, are the shorts going to somehow get the price of metals down? Because there's so much open interest. Whenever there's historically high open interest, they could smash the price. Unless something happens, like something blows up in the sandbox, or we get a huge market correction. Because the beginning stages of a market correction, people go into gold, and the mining stocks start roaring. And then towards halfway through, let's say a correction turns into a crash, then margin calls start happening, and then everything drops, including mining stocks and gold on the futures market. So And I'll make a separate video on that again because people are always worried about it. So I'm speculating. I don't know what's going to happen because what if these shorts get squeezed and then the gold just literally shoots straight up and makes like an all-time high? And that could happen because something happens in the sandbox, right? Or maybe there's a huge market correction. And that could actually cause a massive short squeeze, even for the banks and the commercials, which would actually blow up some of these banks, right? And then that would be hilarious. But, I mean, so I don't know what's going to happen. I'm hoping for the best, right? Where we get a huge short squeeze and we just shoot straight up a few $100 more on gold. I don't know what's going to happen, guys. It all really, I think, depends on what happens with the S&P 500 and the equities. And a black swan event, which is what? Something blowing up in the sandbox, or maybe something else. I don't know. A black swan event it's an unknown. It's an unknown. It's not even known. You don't know when it happens. You don't know if it happens. You don't know what's going to happen with the repo market. You don't know how the market's going to react if the balance sheet keeps rising for the Fed, right? So let's just keep. So Monday I'm gonna be making some more videos. It looks like, because I'm worried that there's gonna be a correction, but I don't know if there really is going to be a correction. Looking at just metals themselves, this is the ratio. The ratio is still high, so we're nowhere near the beginning of the bull market. I mean, we are at the beginning of the bull market, but the ratio hasn't even fallen. So this falls as we go through the bull market. It hasn't fallen much. The ratio, the silver to gold ratio. So silver, if that breaks out above $20, it'll pull gold higher. I've seen that where they interchange. Right now, gold's pulling silver. Looking at the weekly here, the MACD still is going to cross to the upside on gold and silver. So I don't exactly expect a correction. Although, of course, if you go to the daily or the 12-hour or the 4-hour, it's extremely overextended. Let's go to the 3-day. The 3-day on gold's on the left. The MACD just crossed to the upside, and there's still more room to run on the 3-day for gold and silver. So even with the daily and the 12-hour and the 4-hour overextended, if I take it to the daily, you'll see what I'm talking about. Here's the daily. It's overextended on RSI momentum, but there's a little bit more room to run on the daily as well. Looking at the TDI, I mean, the counts are still bullish. Although the heat map, maybe a small pullback. Listen, if there is a pullback, I don't think it's fallen below 1,500. I think it'll just bounce off 1,500 and then just go back up. Especially by then, there will be a market pullback or correction, which will signal for metals to go higher again. So I wouldn't worry about it. Now, if you're trading, right, if Monday they smash it, by Tuesday the price is falling some more, you might want to take profits. I don't know. I'm just going to watch it Monday morning. So I'll keep the guys in the private group updated. I can't make videos all the time, constantly. All right, guys. Plus, I have something going on tomorrow morning. Of course, I have something scheduled that I can't unschedule now. All right, so I'm still bullish for the next few weeks and months. May there be a little bit of a correction or pullback to 1,500 tomorrow or Tuesday? Yeah. Is it the end of the world? No. If there is a mini correction, it'll probably shoot right back up. Maybe even by the end of the week. I don't know, guys. So nothing, I don't think, has happened over this weekend. But, maybe something will happen Monday. I don't know. Alright, guys, smash some likes, leave anything in the comment section, share my videos. I'll see you guys next time. Go to my website and join the private group if you're interested in mining stocks, right? Till next time.